All right, good morning. It is, I think it says 6:33 on my clock. 6:33 a.m. on Wall Street. It's time for QuantBox Live, your opportunity to get your quant on, get your macro going, uncover the best fundamental investment opportunities across the global markets. That's our goal today. My name is Wayne McDonald. I'm the founder and I'm a Harvard educated economist. I trade commodities and currencies, futures and forex, love it all. But it all starts with the fundamental analysis to understand the trend before you look at the technicals. We'll try to do both today. Now, if you're watching on YouTube, you're watching a delayed version. It's 6:30 in the morning right now, and we're doing this live by 7 a.m. The video is up on QuantBox for subscribers, and then it gets uploaded and released on YouTube at 10 a.m., hours and hours later. Why don't you give it a try? QuantBox is only $8 for the first week. Not even $8. $7.90. Why? Why is it? Because I can. I mean, it's $7.90. So there you go. It's up to you now. Give it a try. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Oh, I got to log in. Excusez-moi. Merci beaucoup. Ah, ha, ha. All right. So the last video for QuantBox Live was Monday, June 19th. So today must be Tuesday, the 20th of June. Very cool. Let's log in to QuantBox Pro. And I have so much love and joy I want to share. There's some really good news coming for QuantBox Pro subscribers. Redonkulous things happening in the background that you don't know about. You've maybe have seen hints and glimmers of certain things, but there's a tidal wave, a tsunami, a cornucopia of awesomeness on its way that you're going to learn very, very soon. I want to tell you all about it, but I can't. Anyways, let's get going. Yeah, cool tools and features on its way. It's amazing. Anyways, looking over here. Boop, 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 boop. Lots of neutrality. You can see, and if you watched yesterday's video, we were talking about how there was no real sort of trend. And right now, it's still very neutral. Okay, lots of things on the X and Y axes. So I'm trying to break it into pieces here. Not a lot like Aussie CAD is down, but everything else is sort of neutral. There might be a shift going on, which is kind of interesting. That'd be neat. Everything up here, okay. It makes I see a lot of Aussie here. Aussie weak versus the pound, Aussie weak versus the euro, Aussie weak versus the CAD. I guess Aussie's weak today, huh? Cool. I see a dollar here. I see a dollar there. Dollar strong. Yeah, just lots of neutrality. All right. So, anyways, things to look at: Euro CAD, Euro Aussie. Right? No, no. Yens. How are we doing on the yens? Yens are still a strong buy. So let's take a look. Let's do a deeper dive over there. Let's do a scatter plot. This is a new bonus, by the way. You're welcome. We just kind of did it. Didn't announce it, didn't do anything. Right, Denise, right. Yeah. The meeting minutes. Oh, coffee's good. Good job, minions. What do we let's do take a look at some of these. Where do we have? We have yen strong, yen strong, yen strong, yen strong, yen strong. Okay. Maybe we're topping out on some of these stock markets. Let's switch over to the indices. Yeah, NASI down, DAX down, S&P 500 down. Dow down, FTSE up, and just slightly up, Japanese stock market. So, if you're doing technical analysis, you know that some of these assets like S&P 500 are really overbought and at very key resistance levels. So it's kind of interesting that suddenly after 5 weeks of up, does this mean that resistance is going to hold? Well, it is a key level of resistance. It really truly is. We also have Jay Powell talking tomorrow and the next day, I think first to the Congress and then second to the Senate. And even though we just had a Fed meeting, like I don't expect new information, but it may be reaffirmation on the future rate hikes coming down the pipeline. And I think what people have been trading is the short run of no higher rates today, but then they're going to have to price in those two rate hikes later. And what does that mean? Well, I think we have some real estate news coming out. Well, is it true that the mortgage rate now in the United States, and I don't even think it's for jumbo, the 30-year fixed mortgage rate is just about 7% right now? Is that right? Whoa. Holy smokes. So that industry is dead, right? Anybody want to refi their 3% mortgage into a 7? No. Like that. So, so Jay Powell's going to talk about that, right? Like that whole industry is offline. I mean, that's a big deal, guys. Think about it. Even if so, let's just say no one's going to sell their house unless they have to, because the next house would be half as big and just as much money, or just as big but twice as much money. Either way, no one's going to do it unless you have to, right? But what about the other part of the industry where you're like, well, I can't afford to move, but it's time to fix up the house. We need some new windows. We need to redo the kitchen. We need some new appliances. The bathroom is nasty. Let's put in some subway tile. And you're like, oh, we'll just do a HELOC or some form of taking the money, taking the equity out of your house. Not at seven. A HELOC is probably pushing 7.5. Okay. A couple of years ago, when I told you you'll never see this cheap free money ever again in your lifetime, you need to get as much of it as possible. I almost bought a 12,000 square foot house that had homeless people living in it. And there was also an explosion. No fire, just an explosion. Like, you're like, really? Yeah. And so obviously it needed a little tender loving care, aka money put into it. So I contacted a bank and I'm like, I need a construction mortgage where they give you a mortgage to buy the house, but then they give you a little bit more money to put into hiring contractors and all that kind of stuff. It is structured much differently, and it's much higher interest rate. And I told my wife, I'm like, I should do this. I want to do this. And she's like, four and a quarter for an interest rate. That's crazy. And I'm like, this is cheap. You'll just wait, right? And anyways, a construction loan was four and a quarter on a jumbo construction loan. And now just your basic loan is 7. That's the difference, right? That's amazing. So a project like that is impossible now. Absolutely, totally impossible. So, anyways, what I mean by that is I would have hired dozens of workers. I would have bought $50,000 in drywall, right? It needed $30,000 in roof repair because the roof was made out of slate tile, stone slate tile for a 12,000 square foot house. That's a lot of slate, my friend. Nope. Can't do that when interest rates are high. So that means all that productivity of fixing up that beautiful old house gone. So GDP falls, so on and so forth, right? So does it matter that those rates have gone up? Yeah, that whole industry of real estate, house flipping, or even the idea of fixing up your old house, which is productive, right? You're putting money into your home, that's an investment. So the I in investment in GDP, right? Like, you either consume your money or you invest your money, right? So putting, right? What do you do with this? What do you either spend your money, invest your money, or save your money, right? And I is savings. So if you can't take money out of your house, you can't invest that equity, which is just paper value, and you certainly can't take money out to buy Cadillac Escalade. So it removes a lot from the GDP. It matters, anyways. All right, so let's get on with it. Just want to show this just very quickly. So these prices are quite high. You don't see it here. This is just trend analysis. But when you start to look at things like monthly pivot points, yeah, up here, we'll take a look at this in a second, but up here is very, very toppish. Okay. Period of June, July can still, right, can still be big, followed by down. So, what's on the back of my mind? My spidey senses are asking, let me do this in gray. My spidey senses are asking, like, what about this period coming up? Okay, that's where I start. And then I say, oh my God, well, if this technically, whatever that price is, let's say 4,500, if this is a monthly M3, sorry, R3, monthly R3, which is something very rare. But when you're up there, it's important. Well, that's kind of where we are now. And then I look at, is there a rollover coming? Well, that might be the price. So that's why you have to pay attention to these things. And that would lead the way of whether we're risk on or risk off. Okay. And that's where you get to, like, just looking at peso. This is what I was doing yesterday. I was watching this. The interesting thing is, you know, hit the 21, down, 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 up, up, hit the 21, sell, down, 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 up, up, hit the 21, sell, down, 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 up, 21, sell, down, 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 up, 21, sell. Oh, this one stopped working. Why? Well, that's what this whole gray stuff is. That's that's what it is. It's telling you that's where you should stop selling. Okay. And so imagine everything is at some sort of level of, if it's up, maybe we're at a level where up is near over, or if it's down, down is near over. Okay. So it's not necessarily buy. What this represents is, if you're a bear, you should consider taking profit off the table. Huh? So, anyways, so now we take that, move that forward. Oh, and here's a different example of the same thing. This is the South African Rand. And this is the projected high that we had on January 1st. January 1st, we said this is our conservative target for the year for USD South African Rand. And look at how beautiful that worked. Isn't that amazing? The first day of the year, and we hit that on June 1st. Okay, January 1st, we were here. I look at the importance of some of these levels. It's cray cray. Okay. And right on the midpoint of the year too. Pretty interesting. All right, so zipping back over to the stock market. Uh 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 oh, we're over here. Okay. Look at that beaut. Couple of things here. When measuring the stock market from this point, oh, yeah, well, this point, from this time frame. Okay, this goes back to the October rally of last year. You measure the mean and then the variance, okay? And then you standardize it by taking the square root of the variance, okay? You get standard deviation. And we're precisely at the high side of the deviation. the standard deviation from the trend. By trend, we mean mean, but we're actually looking at the slope of the mean, right? The rise over the run. Okay. Okay. This is rise, rise over run. Okay. So, anyways, so we call that trend as traders. And the interesting thing is we're right at the top end, but also we're at that key level of R3. We're not supposed to be up there. We didn't do it in November. We didn't do it in December. We didn't do it in January. We didn't do it in February. We didn't do it in March. We didn't do it in April. We didn't do it in May, but here we are, June, way the heck up there, way out of position, way overbought. Okay. Did we do it in September? No. August? No. July last year? No. June the year before? No. Like I'm telling you, like that is way high. So, wouldn't it be interesting if you knew that typically this time of year, we start to move this direction for a few months? Would you like to know that? Well, I already showed it to you. So all of a sudden, now this carries another level of importance, right? Because you would think, well, where's the next level of support? Okay. Okay. Well, if you were going to try to combine those two, down 2 weeks in June, down 4 weeks in July, get here in sort of the middle of August. And then what? The mother of all rallies. And we revert to up to that mean and maybe on our way to 5,000. Shut the back door. 5,000 on the S&P 500? Well, I don't know that. Okay. But I'm like, wouldn't it be interesting to be at the bottom of this range right before a seasonal rally? My biggest concern, and I said this back in the January outlook, I'm like, I'm worried that the rally, the seasonal rally doesn't show up. It's sort of like a farmer planting seeds in the spring and it never rains. And you're like, I'm ready. And it just never rains, never rains, never rains. Little plants pop out of the ground and turn yellow and then turn brown and die. Okay. The spring rains never showed up. So that's what I'm worried about this year. But the more we've learned since January, so now we're halfway through the year, the more I've learned is holy knickerschnocker, maybe our recession is in 24, not 2023, but 2024. Because the Fed, really, honestly, I think they're shocked. Maybe everybody's shocked. They expected unemployment to be rising by now. We haven't even started that process. So in January, I explained the two parts of a recession. And we're still not in the second part. Like, wow. So if we're going to go to 2%, we need to burn $5 trillion out of our economy. And we're probably going to need to do it through the loss of money out of your retirement account and loss of jobs. Right? So, anyways, holy smoke. So let that be your leading indicator today. You should know the German DAX hit its target and has started dropping. Okay. The Dow hit its target. Let me zoom in. It's not just the fact that it's resistance. Okay. But this is the monthly target. Okay. And it might be hesitating. S&P 500 on its monthly extreme target and it's hesitating. Okay. So on and so forth. So use the stock market today as your guide. In particular, you might use the, let me zoom in, maybe a smaller time frame, zoom in here. And in particular, you might remember, I set this up somewhere else, I think, but there's a potential for this to turn into a head and shoulders, and that means buy Japanese yen. Even though the Japanese yen is in a policy, like the central bank of Japan is in a policy of weakening the yen, doesn't mean it has to weaken every single day. So it smells like profit taking to me. And pretty soon, fund managers are going to be putting fuel in the jet and heading out to the Caribbean and leaving the trading for interns. And so maybe it's time for that yen just out of the blue, get strong. I don't know. We're in that time of year where stuff like that happens and it doesn't make fundamental sense. But then when you think about it, people have already made their money, right? The S&P 500, isn't it up 30% from the low in October? Yeah. And we have some concerns about the second half of the year. Well, jet fuel ain't free, Bubba. So you got to take profit on something, go to cash and walk away. And so who knows? This is that time of year where you have to keep it in the back of your mind that well, the uptrend, all uptrends need to take a break. There'll be a retracement in the uptrend. And maybe that's being born now. I don't know. That's why you got to do your research both fundamentally and technically. My name is Wayne McDonald. That was a QuantBox Live. I will see you guys later. Thank you for being subscribers. Yeah, should be an interesting trading day, really, honestly. So good. Yesterday was slow. Today probably won't be slow. So peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you. Cheers.